Okay, welcome everybody. We are here to talk about fundraising in 2026, which I imagine is a big topic for a lot of people in the room. Excited to have some fantastic panelists with us today. This is great for me because these are questions that I get to ask just normally in my job every day. So now I get to do it in front of a nice crowd and with some incredibly knowledgeable people. So to kick it off, just a short round of introductions. We have Arpan Shah. You are at Spark Capital doing, sorry, let's make sure I have my notes here. General partner, early stage at Spark Capital. You were previously at Pair VC and worked as a scout at Sequoia. You joined the founding team at Robinhood, and you are also a founder. Founded the fintech Flannel, which was acquired by Plaid. And next down the line, Ethan Choi is a partner at Khosla Ventures. He's focused on growth stage companies. Prior to Khosla, Ethan was a partner at Excel, and he was also previously at Spectrum Equity. And at the end there is Malika Aubakirova, if I've got that right. You're an investor on the AI infrastructure team at Andreessen. Prior to A16Z, you led engineering initiatives at Chronicle Security. Malika has a background in back-end systems, front-end development, and site reliability engineering. So let's kick it off. Ethan, why don't I start with you? There's an AI boom, maybe not a surprise to everyone here. There's also a lot of problems with liquidity in venture capital. So we the best of times, the worst of times in venture right now.
It is the best of times. I mean, just to be very clear, this is the most exciting time to be a venture capitalist in the entire history of the world. I mean, we have all the pieces that have built up to this point, singular point where, cognitive intelligence is now being, we're able to wrap that inside of applications that are extremely useful. So, look, bubbles, if you want to call it that, or overhyped valuations, it's all part of the system. It's kind of my view. It's not a bad thing necessarily to have that, and it's very difficult to not have that happen, frankly. When you have basically generational technology that's going to change everything, then it does make sense that we do overcapitalize many, many things. Like a lot of you founders here in the room are going to be working on extremely important things. We should, as VCs, be funding as many of those things that we can that have potential to change the universe. If we aren't doing that, that's on us. And so, are there things that we could all do better as venture capitalists? Yes.
So what are those things?
Look, we are. If I lived through 2021, I'm 14 years into my career now. I was at Excel when the downturn happened. That was not fun. Overhiring, having to help founders kind of downsize their teams. Valuations got way ahead of skis, and founders who've taken secondary way too early, venture capitalists who are pushing their companies to do unnatural things to grow. Those are the externalities that we obviously don't want. So, look, there's going to be bad behavior, and we're at peak. I'm not sure if we're at full peak, but I think from what I see, we are still doing the right things, which is funding the most ambitious, bold founders who are trying to change the universe, and that means they need a lot of capital.
Yeah. Malika, on the topic of AI, how has that changed your actual process of investing? Do you ask ChatGPT for deal leads?
Pretty much every day. I guess before I start, I want to say that, first of all, views are my own. Anything I say is pretty much my own opinions. For any questions, please see a16z.com/disclosures if you have any questions. But I definitely don't want to see any quotes about A16Z with whatever I share today. But to respond to the question, I think, well, first of all, I wanted to echo a little bit about the previous question in terms of like, what is the best time? And honestly, like, the IPO market has opened up. Like, we had Figma, a number of companies go IPO this year. The second part is like, we've seen so many M&A activity, right? Like, our team alone has worked on more than like 6 deals this year. And a lot of them are portfolio companies. I mean, all of them are portfolio companies. And that kind of ties into your question about like AI and what has changed in terms of like how we invest. This year alone, we've seen Scale AI being acquired for almost $15 billion for 49% of the company. And that has been kind of unprecedented before. We now see Wiz being acquired for $33 billion by Google Cloud Security and GCP in general. And that definitely influences kind of our thinking because, or at least my thinking, in terms of how to think about kind of best teams and kind of what that landscape looks like.
But just on the point of exits, some of the IPOs have been down IPOs. So what's that doing to the sentiment among LPs? I don't know if you're talking directly at LPs, but what's the sense of how that those exits might be impacting VC in the year ahead?
I think every IPO is different and every company is different. But I mean, like I worked pretty early on at a firm, and I remember when it went public, it was kind of an all peak high and kind of went slowly declining. And I think it's kind of like almost a function of being publicly traded, that there are so many more fluctuations than being in the private market. But I think in general, it provides liquidity for some investors, especially at the initial kind of IPO pricing, which were actually way above the original priced market shares.
Interesting. So Arpan, also on AI, the numbers, the share of funding that's going to AI startups is huge, to use a scientific term. Do you want to invest in anything that does not have AI in the name?
Actually, I think that, it's kind of like, I mean, my view on this is, the way people say, hey, you're investing in AI companies, it'll be like saying you're investing in like internet companies. Like, no one says that anymore, because every company has to have AI at some part of the, either, software engineers are using it internally or some operational teams are using it internally, but essentially building the company with the premise that AI is a thing. And so actually we do invest in companies that are not what I would call AI branded companies, because the way they're building these companies are very, very AI native. I mean, just in software engineering alone, you see this across the board where engineers are shipping way more code, way faster, in like, the rate of like shipping features has just gone through the roof.
Interesting. So Ethan, we did a story, Thursday Pro VC recently about figuring out revenue at AI startups, and you talked to us for that story. Said you had, if we have this right, these days a 20% confidence level that the pitches you're hearing I have the revenue accurately portrayed, and you said it's a tricky time right now, and as we get into the AI world, that quality of revenue question is what we're trying to figure out. So are VCs overestimating AI revenue at startups?
No, look, the truth is, like, we have not seen growth like this ever before. But the tricky thing is, once you unpack many of these companies, there is now what I call inference revenue. And it's not a bad thing. It's usage-based.
Yeah, what do you mean? What?
Yeah, essentially, like a company, to put it simplistically, they may, there's 50 cents of inference cost to them. that they have to pay a hyperscaler, someone who's providing the GPUs and the stack there, and then they may sell that inference revenue for $1. So that's kind of, it's a different type of revenue to what we were used to in the SaaS era. And SaaS era was very predictable, often seat-based or some other, largely not heavily changing metric, and that was typically the driver of enterprise contracts. And I'm talking mostly enterprise today. So, but today, you take a company. Let's take two of our companies, Replit and Lovable, right? And there's a base subscription, and then on top of that, you use above the credits, and you're going to get charged on a per kind of credit basis. And so the onus is on us to understand, is that underlying workflow that's driving that inference revenue, is that sticky? And is that durable? And is that here to stay? And there may be some fluctuations, but is it directionally moving up? And there are situations where there are some companies where that revenue is, that underlying activity is naturally very high has high volatility. And so for us, it's really tricky to try and underwrite some of these later stage investments where it matters as it gets closer to an IPO, where we're thinking, okay, how is this going to get valued in the public markets? It's still like, sure, Figma has some AI revenue, but there hasn't been a pure AI revenue that's pricing off of inference revenue, and what multiple does that revenue get? Because if you think about enterprise SaaS multiples, historically, it's somewhere between 10 to 20 times revenue on a forward basis. And then when you get to the peak of 2021, that shot up to somewhere between 40 to even up to 100 times. And so us as private investors, there is you would think sometimes that we should be paying less than the public markets, but that's not true, because there's so much capital, and these companies are growing so fast that we're often paying 2 to 3 times more for a very, very high quality company than the public multiples. So my kind of frame of reference used to be, blue chip SaaS. 15 years ago when I started investing, we're talking ServiceNow, Salesforce, traded at 5 times forward, somewhere between 5 to 10 times. So we were used to paying 10 to something 20 times. During the peak bubble of 2021, we were paying 100x, revenue. And so, once an inference-based revenue company goes public, does it trade at 10 times revenue, or do the analysts unpack subscription revenue versus inference revenue? That's the thing that's a little in the air that we're trying to figure out how to do that. And to be honest, we don't really predict pricing sometimes for the very best companies, right? They get to raise at whatever valuation that they can get, and then we as investors decide whether we're going to participate or not.
Malika, I see you shaking your head. How do you assess that question?
I guess a lot of the team members spend a lot more time thinking about it. I guess for a lot of the companies that I work with, it's just traditional enterprise sales, especially focusing on AI infrastructure. So we don't spend a lot of time with kind of Lovables of the world and kind of some of the other companies. So I think what Ethan kind of mentioned regarding the inference pricing has definitely changed a lot in terms of kind of how we think about even pricing it for companies. I think one thing that's worth noting is how the end buyers perceive that price. And so far, a lot of the enterprises, when we talk to them, they're actually willing to pay the premium but have the stable costs, right? Because a lot of the times you want to have the predictable budgets for specific services. And if you don't know what the price will end up costing you, it's kind of not. It brings kind of certain other challenges. Mm-hmm.
So all the founders in the room should get a premium price for their startups?
Yes.
Yes.
So let's shift and talk a little bit about advice that you might have as investors, as former founders, and I wonder if we could start with you, Arpan. You've been on both sides. You've been now an investor and previously a founder. What do you know now that you wish you knew then?
There's so many things. Yeah, I could go on and on. But I think the biggest thing, like I think that people should really think about is that, and you know, you were saying it's like a great time to be an investor. I think it's like one of the best times to be a founder as well, because, you know, rarely do great companies get started without some kind of rip in the vortex. You know, like something has to change in the world to make it possible for a new company to transform an experience or go after a very large incumbent or something. And like that's happening right now. So I guess the biggest thing I would say is that, like, you know, noticing the moment in time, and you know, one of the like lessons that I learned in my own journey was that if you have a technology which you know is going to catch up to the kind of capability, but everyone else doesn't see it yet, that's like a great time to go and try to build that company.
Mm-hmm. So you've been a scout, and now you're looking and talking with founders all the time. What do you look for when you talk to a founder?
I think everyone has different tastes. Like personally, I'm really drawn to very technical founders who have some view or insight on the technology that is further along than what most people think about, or I personally may know. Always trying to find, like, I'm learning something, especially technically from this founder. That always gets me really excited, because, you know, no matter what happens, no matter how good AI gets at coding, those people who kind of know how to leverage it in the best way and pushing the boundary of what's possible or where it might break, are likely to find things that are non-obvious. And so that's one of the big things I look for, is there like some deep technical insight? Is there like a very sharp technical person here who is pushing that vision forward? So that gets me really excited. But I think everyone has different tastes, you know, both different funds have different tastes, but even within the fund, different partners have different kind of tastes. So there's probably an investor for every type of company and every type of founder, but personally, that's what I get really excited about.
Interesting. Ethan, you're at the growth stage. What kind of attributes are you looking for when you're evaluating a startup and a founder?
Yeah, I just to make clear, I do early stage as well, but my day job is to run the growth fund at Khosla. But look, it's not too dissimilar. There's I try and think of it as like, is this founder the world best person to be attacking this problem? And it could be highly technical, or it could be something that's verticalized. Like I take Shiv at Abridge, who's a practicing cardiologist who understands the doctor and the patient super well. He's the world's best person to be building a bridge. Or if I take Aaron and Yuri from ClickHouse, who've been building distributed systems and databases for so long, like they are the world's best. So it comes down to that piece where it's like, is this team the world's best people to be working and attacking on this problem? And maybe to try and loop that into this whole summit, right? And immigrant founders. I was just thinking about the split between immigrants and non-immigrant founders that I've backed. And I think it's 80% immigrant, 20% like Americans, and that's because I'm an immigrant myself. And so there is this thing where you come through, and as an immigrant founder, maybe, you know, the US culture there's a little bit of a gap, but, you know, ultimately as a founder, you're trying to find that partner, that individual at whatever fund that you believe is the best person, best partner for you as the best person attacking that problem. And that's what it comes down to. And so there is this connection. I mean, you probably all feel it amongst each other and us here, where that difficulty of buying a one-way ticket, like leaving your family and whatever you needed to do to get here, and then I lived off of eating like pretzels for my first year of university. And buying bus tickets in the freezing cold, and like just making ends meet to get to this point where you have enough resources, network, and connection to attack the thing that you want to attack. And I think, I was thinking about this, like, there's a storytelling piece that founders have to be able to do to cross the chasm of, like, there's this US culture, and there's this founder, there's this extra piece of, like, are you commercially aware enough of to be successful here in the US? That's what also what I'm testing. And you have to demonstrate that you have the capability to understand that, you're self-aware that you may not completely understand that, and you're going to build a team around that problem set for yourself. And if that founder is self-aware that they're on that journey, and I can see that they know that they need to work on that, then I'm still willing to back them, right? And so that, for me, there's a little bit of like storytelling, but I also call it like, you also have to be a teacher as a founder, as you try and find the right investor for you. Teach them about your background. Teach them about how you're going to overcome all the things that you're going to try and overcome to get to this big vision that you're trying to deliver.
This is the kind of heart of the matter here for our discussion. I have several questions on it. One, Malika, I wondered if you might talk just generally, how do you think venture capital needs to change to be more open to immigrant founders? What kind of bias do you think immigrant founders encounter when they are pitching a firm or talking to VCs?
That's a harder question than the last one.
You're at a big firm, so you get a big question.
No, I mean, like, we're seeing so many amazing immigrant founders around the world, but I think still to this day, a lot of the founders end up in San Francisco Bay Area and come from all the different backgrounds. I grew up in Kazakhstan, knew nothing about venture capital, kind of at the brink of the post-Soviet Union world. But I think to echo kind of like what we talked about just now and kind of tie into the conference, it's not about where you came from, but how that defines what you're building. Because ultimately, how different do you have, how unique is the insight that you're bringing? We were just chatting in the green room, but we're taking tens of pitches every day. And a lot of the pitches are absolutely incredible, but a lot of the times it's about the pattern breakers, the pitches that stood out and were really different than the pitches that were all kind of similar. And it's hard to explain exactly and pinpoint what was different, but it's about the difference of the unique and insight. And to give a specific example, like one of my favorite stories is the founding team from 11 Labs. They grew up in Poland, and when they were growing up, all of the movies that were made down in Hollywood were actually dubbed in one unique voice in Poland. So imagine watching a movie where every voice, every character is just one voice. That's why 11 Labs was born. And what Matty usually says, and it's not my quote, but what he usually says is 11 Labs could not have been born anywhere other than outside of the US. And I want to give kind of like a second example. And it was just funny because it's kind of like a quote that I resonate a lot. And being kind of on AI infrastructure team, we'll look at all of the technical teams, but also cybersecurity. And I come back to the founding team of WhatsApp. And on the way here, just to tie it back again, on the way back here, I actually was scrolling through my LinkedIn and one of the posts popped up and it basically said how Brian Acton, who was the founder of WhatsApp, actually applied for Facebook, got rejected, and obviously started a company that was later acquired for almost 20 billion by Meta. But the story here is like the founding team there grew up in Ukraine, and at least one of the co-founders, and his quote was something that stuck with me, but it was basically that walls have ears. Because in kind of like that time of the world, at that time in the post-Soviet Union countries that I resonate a lot with, you couldn't really politically share a lot of your open thoughts. And so people would say that like walls have ears. And so WhatsApp was a communication messaging platform that enabled that kind of encryption, that you could protect all of your messages from being kind of decrypted, obviously. And so again, like it's something that comes with lived experience, but whatever you start, whatever you pursue, it has to come and be built by you.
Arpan, another key question in this area are changes to H-1B visa programs and other policy changes from Trump administration. How have those factored into your discussions with founders? How often does it come up in terms of planning out your investments and talking with founders?
Actually, fortunately, I think for most of the founders that we've met or meet, it feels like if they're doing something really interesting, especially with AI, they're able to get an O1 visa, or there are other visas that you can kind of try to get. And if you're exceptional, which a lot of these founders honestly are, and that's, I think, one of the things I'll often tell people who are working on cool things is like, you're probably really, really good. Like the fact that you're building this means that you're probably exceptional. You probably have like some unique technology, unique insight. And fortunately, there is, the open visa, there's other visas. And actually, like from a founder perspective, that's not been as challenging, honestly. I think it's been really great to see that people who truly have interesting ideas are able to still execute them. I see more and more founders who are building cool things. Even in VC, you see like so many founders from across the world get these visas and come and like build their companies here, which I think honestly, this is the heart of where all of this is happening. So it's great that we have everyone here as well, because if you can build a company here, you just have that much more of an advantage. And I think, if you're doing something interesting in technology, there's actually a lot of ways to make sure that you're building amongst the best people who are all here. Mm.
What do you see, and do you see any change in the numbers of people moving to the U.S. to launch companies? Do you expect to see any change in that flow?
Honestly, I think my expectation is we'll continue to see more people wanting to build here. A lot of it is downstream of the fact that there's a lot of venture dollars here. So you kind of need capital to launch a lot of these companies. And by virtue of where the capital is, you will see a lot of people building here. And there's like a lot of network effects to technology products. And I think it'll kind of find its way where I expect the demand for founders to be a lot higher to want to build here. And I think that should, we'll see. But I think my expectation is it'll sort itself out, because that's where you kind of need to build these companies.
Mm-hmm. Ethan, you mentioned the one-way ticket. I learned that is what the name derives from. How often do you ask for and confirm that a founder you're going to invest in has a one-way ticket and is going to be here going forward?
Not very often, to be honest. Yeah. Like, I think the dedication to whatever they're solving for, where their family is, it all kind of maps. I guess what we test a little bit more for these days is like, are you fully remote, or are you guys all in the office? Mm-hmm. Like Khosla, I have some partners who will just not invest in you if you're remote. I'm a little bit more flexible on that, but I would prefer fully in the office.
And so when you say remote, does that include someone who may be based in another country, or is that remote within the US? How does that break down?
I mean, a good example is like, I seeded a company called Outsmart. It's the former chief product officer of Duolingo. His name is Jorge Mazal. He was in Uruguay when I invested. It was a big seed. It was a $10 million seed. He's building, he's in stealth, but he's building a new college, basically, with AI tutoring curriculum. I thought hard about, oh gosh, Jorge, are you going to build this company in Uruguay? Or are you going to have some people here? He was like, look, I think it's going to be remote. And I was like, I really think you need to focus and figure out where you're going to like centralize your team. But at the end of the day, he was the chief product officer of Duolingo. He built a lot of the value there. He's the world's best person for building that. I said, I'm going to just figure it out with you, and I'm going to invest in you. And so at the end of the day, the thing that all of you have going for you, like to Arpan's point, you probably are really brilliant in math or computer science or something technical to be here. You've self-selected to be here. And to some degree, even if the visa program in UK or Canada makes it so much easier for you to go there, you probably have made the decision to be here in the world's best place to build AI and technology companies. That signals a lot for us. And that trumps most other things. The quality of you, your insights, what you're trying to build, trumps whether you're going to be remote, whether you're male, female, immigrant, not.
Gotcha. Malika, does a startup for you need to be in the US to raise US venture capital?
The last seed we led was in Israel. And I think to 11 Labs, which is a portfolio company for A16Z as well, we do have kind of a global presence. And I think one other example is not only, even if you're here in San Francisco, and it takes a lot of effort to be here, and it's a place to be in many respects and to be even learning from other founders because of VC capital and for many, many reasons. But the talent is global. And even for, again, coming back to 11 Labs, like the way they're hiring is such a differentiated way of thinking about anything about hiring. They actually don't take resumes. They look at all of the GitHub repos and contributions and find talent globally. I think the one example that stands out is they found somebody working at a call center in India who was actually creating music on the side and contributing some kind of open source projects. And he really stood out as somebody who was very different and was working on very cool projects. So that's how the team at 11 Labs reached out and ended up actually hiring that person. So 11 Labs, at least, is very different in many respects, and they take that as an advantage. I see a lot of the teams also find technical talent way outside of the US boundaries. And it is helpful to, again, come here and be in San Francisco, and I think that's probably the place to be, but the talent is global.
Looks like we have time for two other questions. One, I want to know what everyone thinks about the rise of solo founders. We did a story about it earlier this year, and it seems as though it's just become more and more common. Arpan, do you feel that being a solo founder might be an advantage for an immigrant founder as you try to, establish a network?
I personally couldn't do it, but I think I was very fortunate to have my co-founder, who's also an immigrant actually. But I think honestly, it probably says even more in some ways about your determination if you're willing to be a solo founder. I'm personally just blown away by people who, are able to kind of bring themselves to take such a big leap as to start a company, which is obviously a massive investment of your time, energy, et cetera, but also people who've kind of built something with that. And I think the biggest thing I would say for solo founders is if you've built something, or if you can show something that you've done, that is a great way. It doesn't matter basically after that, whether you're a solo founder or not. And in many ways, it's better to be solo than have a co-founder who you think is not aligned with the way you might want to build the company or the culture you might want to have or how you might want to hire. A lot of things have to be right to have a great co-founding relationship. And so better than compromising there is to probably go solo.
Ethan, Malika, any thoughts on that topic?
Yeah, my partner Vinod likes to talk about the one-person billion-dollar revenue company. It's possible. Just I don't know, anything's possible. We're talking about world-changing companies. It takes people to build a really special company. So I personally, I like co-founder situations with complementary skills and backgrounds. I really believe startups are a team game, and sure, you may have just a brilliant person at the helm, but it really takes an army of like-minded people with a special culture to build something like Khosla, right, or something like OpenAI. Sam is a singular singular person, right? But you need Greg Brockman, you need Ilya, you need Mira, you need all these people to contribute. And I just think, sure, there's $1 billion revenue company with one person. Good for them. Fantastic. We'll find best teams. Yeah.
I guess empirically, like this was the first year where at least I've seen YC accept solo founders. Like never before, that was almost a prerequisite. They would have all these other websites where you would have to find a co-founder. And for the first time, I think there were multiple mini teams that had only solo founders. But I think kind of like to Ethan's point as well, it's, I don't know about kind of like if it's not a prerequisite to be a solo founder or like the quantity of founders. It's obviously about the quality, but also like we do see kind of the rise of nano unicorns and just efficient, lean startups where every member, every talent does matter. And you now have companies like Cursor who are the fastest growing to 100 million in revenue, now billion, obviously, and the teams were less than 50 people when they did the 100 million.
All right, last question. We'll do a little speed round. What's the biggest fail in pitches that you see? Start with you, Arpan.
It's talking about an exit, like, hey, if this doesn't work, we have this plan to sell the company, and this is like the plan B, plan C. Like no investor I know wants to see that. You know, they want people who like want to make it their life's work. So don't put that in there. It might be at the back of your mind. That's totally okay. But yeah, it's just not a good idea.
I think I was at a Korean tech conference, and like sometimes Koreans come in with a business card, and like, you know, bow, and then there's a business card exchange. I'm like, hey, that already creates a lot of distance culturally so I think like don't be too formal. There's a little bit of a come in, and you got to balance like humility with a little bit of edgy confidence that you have to do. Yeah.
Malika?
A lot of examples, but
We'll pick the best one.
some turn on your camera when you pitch over Zoom.
That is a good one. But can you give us one more if you got a lot there?
Yeah, I guess some other examples. Let me think about it. But
Do you also have to unmute yourself? Is that another key one? No, not you. I mean, once you turn the camera on.
That's true. I mean, there are some kind of like, I guess, engineering teams who are not used to pitching, and there's like awkwardness there. But also, I guess, just teams who pitch too early before they settle on an idea. And they keep iterating and iterating and iterating and iterating to the point that you've pivoted 20 times before you settle on anything that you want to pursue. Another mistake is actually building too fast, where you haven't really identified the space and the actual kind of opportunity, and you build a product that actually probably like not many people need.
Interesting. All right. Well, my wife likes to talk about, 3 things to take away from any discussion. So we've got, don't talk about your exit before you've gotten funded. Have a little confidence, maybe a little swagger, and turn on your camera. Right. All right. So with that, I think we'll end. Thank you all very much.